What is going on YouTube? I was messing around with some audio settings, so hopefully I sound better. I noticed on the last video that the audio quality wasn't the best. I felt like I was a little quiet, but back in business. So really quick, there's a few things that I want to talk about, and one of those being the SPY. We are at a new level here of support, and although I don't know where this is going to go, there's a few things that I want to point out here, and one of them being on the 6 month daily right here. We can zoom out a wee bit, and we're on a -1 of the standard deviation channel. So what does that mean? It means we're at an extreme level. It means that price is testing a point here, whether this is a line of support or not. We will find out whether it breaks through this line of this extreme level. We will find out. Hopefully, we'll find out this week, and hopefully things start to bounce back a little bit. But on the other side of things, volume, at least for yesterday, doesn't look too crazy. It's very low volume the past 2 days. So we can see these two candles over here. They have significantly larger volume than yesterday's, and as of this recording, it's 9:27. So throwing out all these yesterdays and whatnot. But on the 3-year weekly chart, we can see that the IV percentile is at 94%, which is nutty. But moving on in closer, we're going to go back to my 6 month daily chart because that is my favorite chart to look at. Interestingly enough, IVP is not popping up on here, so that is cool. On the 6 month daily chart, we can see that volume is picking up slightly. We got the previous day, 926 here. We got volume sitting around 96. I believe that is in millions, so 96 millions, and then 96 millions. Today's 927, we're sitting around 105. So volume is starting to increase there. On the money flow index, we are actually at an extreme level around the 24 mark. So that is also a sign of, a potential oversold position on the SPY. And then I want to specifically talk about my positions. So as you guys may or may not remember, I have a few positions on. One of them being in Apple right now. And this is my chart, not really my chart, but this is my trade log. So this is what I'm using to keep track of my ratio call diagonal and my ratio put diagonal. So they both look the same, different numbers in here and different verbiage. But the main point here that I want to point out is I have on 2 long calls, count them 2, on Apple near the 70 strike, or at the 70 strike. So they originally cost me 84.35 on the initial long setup, and as of current, that's actually not current, but as of the last update, which I believe was yesterday, they were sitting at 82.38. So they're roughly down 394, but it is what it is. I'm not really too worried about these guys being down. I have a lot of time left on here. I have 179 days to expiration. So really, there's no pressing need or urgency to really do anything with this position yet. So if anything, I can look at potentially buying another leap and reducing my overall cost basis. And that would be awesome. So we're just going to keep note of it. Keep keep one eye on it. It's like I said, it's nothing urgent. It's not pressing. On the other hand, I opened and closed a short call for a $1.19 credit on open, and then I closed it out for 24 cents. So I came out on not so bad with a $95 credit. So that was pretty good. I'm happy with that. And I actually need to go and update this as of, I believe, 0926. We're going to put it in there for now. I hate when it does that, man. There we go. So I opened up another short call on the, what's going on here, man? Stop. On the 155 strike, and I actually collected $3.50 premium on that one. So that one's really nice. I'm really looking to collect as much as I can off of that. And I can tell you right now, the position itself is working against me. So, like I said, initial open was 350. Right now we're sitting at 375. $25 difference. I mean, it's not crazy, but not ideal. It's not where we want the position to go, but nonetheless, my long calls actually are at 82.97, so we're down 275 there. Once again, not a terrible. It's not ideal, but it's not the end of the world. I don't need to look at managing these quite yet. I'm just going to let the time do its thing and let the stock go. If we want to pull it up and check it out, this is what we got. Price is staying pretty well around this 150 area. That's my judgment of a support area, and I'm sticking with that. So we can see that the IV percentile is 92%. So, I mean, these premiums are just, I mean, they're juicy, man. And that's what I want. So I'm taking advantage of that by throwing out those short calls out there. And the nice thing about it is I'm only doing one short call on here. My short call formula, and just a short, quick way to say that, it allows me to sell up to 2, and that's you can see the formula right here. It's just my number of long calls times my long call delta. So it would be, since I have 2 out, it'd be 2 times my delta of 0.87, and then I divide that by 2.1, which is the ratio that I'm going for, times my short deltas. So all in all, it's calculated over here. You can just quick math on that, and it comes out. It'll allow me to sell up to 2. So I'm not even fully skilled in here. I can, if I really want to, jump in and sell another short call, but I'm fine with this right now. So we're gonna keep holding on with that. The other trade that I want to talk about really quickly is the XLF trade, and if I'm not mistaken, I believe that is the last trade that I talked about placing in the last video, and if I'm wrong, I'm an idiot, please correct me. But with the XLF trade, I went ahead and bought 2 long puts at 34 strike for a 16 October expiration. So I got 23 days for this expiration. Not a lot of time here. This is the one that will have to be managed quickly. Current price is 30.43, which is good. That's what I like to see. I like to see the price moving down, because overall, that's what we're looking for in the position. For the long calls, or long puts, sorry. the long puts to appreciate in value. And then we can jump over here. So it says 4 and 2. There was actually a mistake. I double filled myself and got 2 setups for all of this. I'm only tracking the 2 and 1. The other one, I guess, is just for funsies. So what I'm doing here is, even though it's broken up like this on the platform itself on the mobile app, I actually have 2 separate trades. So although this may not be as helpful for tracking price and differences in values, it's nonetheless still helpful of letting me know where the overall position is at. So I keep it that way. Like I said, on the mobile app, I have a much more specific understanding and look at where the position is going. So jumping back over to the template, so on the long calls, like I said, I have 34 strike. They cost me 350 a piece, which is, that's pretty cheap, especially compared to the apples. I mean, geez. But I have a 85 delta on those. And then on the short calls, I have them expiring on 7 Oct. And I sold one of them for an 82-cent credit at the 31 strike. There's a 47 delta there. And it's the same thing, just to the downside. I'm just trying to collect some credit on the down move, and my ratio, it's only allowing me to sell one here. It says 1.72, but with this, you need to round down. Obviously, you can't sell 1.72 lots, so just round down to 1 and keep it that way. Once again, it's the same math, although for this, it's the same math. But for the overall strategy, the math is a little bit different for calculating things like your adjusted leap basis or your critical strike. So if you're following along, or you're just here for the formulas, hopefully you saw them, because they are quite the pain to figure out. And shout out to my mentor, Eric, for helping me out with those. But that is the 2 trades that I'm in. And then jumping back over to the chart for XLF, it's looking pretty rough, man. On the 6-month daily, we're breaking down. This overall line of support I thought was going to stick around here at this 31 level. Broke through that. Broke clean through that. We got 2 candles underneath it. Really, we have increasing volume day over day here. And then the money flow index, it's starting to get to a point. It's not quite there yet, but it's getting to a point of an extreme level. And that might be a sign that price is starting to bottom out. But, who knows? We have all the moving averages pointing downwards. Things aren't looking good right now. And the IVP percentile is at 86%. Awesome. That's so awesome for premium selling and collecting some premium. And that's precisely what I'm trying to do here. So overall, out of both of these positions that I have on, things are looking good. I know, just overall, if you want to care to know, out of the 4 long puts and then the 2 short puts that I have on, we're up overall $84. So 120 to the long side and then minus 36 to the short side. So we're sitting pretty right now. There's no real need to do anything specific. And like I said, with the markets being the way they are right now, things are so uncertain. We can for sure say that we're in a bearish market. And other than that, it's just sticking with my trading plan. I'm in the middle of this paper trading challenge, so I'm really trying to take advantage of where the markets are going. So some possible trade outlooks that I'm looking for could just be really simple trades like long puts, maybe trying to take advantage of some volatility plays. We can see that we're trending down, volatility is high. Maybe I could look for some volatility contraction. There's not a lot of expansion to go here. So um, yeah, that's really what I'm looking at right now. If you guys are looking at anything different, just leave it in the comments. Let me know, and I will catch you guys on the next video. Peace out, man.